Welcome to Virtual Coffee with Dawn Rickabaugh, the Note Queen, where we talk about owner financing and notes. Financial solutions, one mom and pop to another.
All right, well, this is the, just by the skin of our teeth, we're getting in a May virtual coffee call. I was gone the last 2 weeks on a family vacation, which included a barbarian dinner for my youngest daughter's birthday, and I don't need to say anything more about that, but it certainly was an interesting experience, and I'm still taking Advil. So anyway, this is my name is Dawn Rickabaugh. I'm your host. This is where we talk about anything having to do with owner financing and notes. You probably already know, if you're on this call, that my site is notequeen.com. So one of the things that I've loved to do is in the beginning is, since there's so many people that come on the call, I have these hot seat interest forms that AXA will send out, and anyone who wants to have a shot at getting guaranteed airtime sends in these forms. And so there's a couple that I want to go over here. And first of all, Kanisha, I want to know, you're one of our treasured members, one of our citizens of the realm. Are you on the call right now?
Yes, I'm here.
Wonderful. How are you today, Kanisha?
I'm good. Month end. So,
the end of the month.
Yeah, I'm good. So I'm just taking a breath on the last day of this month because it's been crazy.
Yeah. Well, describe the crazy so we can get in there with you in the mess pot.
Okay. Well, so I don't know if I've shared with everybody that I'm also still a loan officer. So I have a couple of transactions that I've been working on, and I think I may have brought up the transaction that I had with my senior citizen clients who I'm financing them into a reverse mortgage while doing some forensic work with Wells Fargo.
Right.
Well, they finally signed closing docs yesterday, and I think yesterday I experienced every emotion possible in the human range of emotions, just trying to get it done not only month end but the day after a holiday. So that was, everything from, I got an email Friday to go ahead and contact them to schedule, to I scheduled to Tuesday morning, docs aren't ready, so who told you to schedule, even though the lender was the one that told me to schedule. And escrow says docs aren't ready. Then I tell the borrower, docs aren't ready. I'm sorry. I know we said we're going to schedule, sign in 10 minutes, but sorry. It was just an hour later, docs are ready now. Tell them to, it was just a lot. It was a lot. So
yeah, kind of, it's almost like when those stab wounds used to come in through the ER. Trying to stop the bleeding.
But in
our business, it's really stressful, but nobody dies usually. Right?
Yeah.
But on a few things, Kanisha has been following the note and owner financing and investing conversation for a while, and you recently quit your day job.
Yes.
But you're still doing. So that takes a lot of courage. So I'm guessing closing these deals is not only just you're trying to perform for your clients, but you're also trying to make a paycheck.
Well, I kind of get that,
Right. So
yeah,
it's
absolutely.
Real. When you leave the security of your W-2, it can be kind of edgy. But there's some things that are interesting about you, and I think what we've been trying to see, what we're trying to do here today is see if we can help you figure out how to market your services, because you were working for who? What was the big bank? I forget.
It was a credit union, Exceed Financial Credit Union. I came from Wells Fargo to Exceed after a break. I was in Wells Fargo the beginning of the turn of the century, That sounds crazy to say.
Right.
But at the beginning of the turn of the century, I was at Wells Fargo for years, and then after we got laid off from there, I was working for myself with the foreclosure consulting and short sale negotiation, et cetera, and then went back to W-2 trading times for dollars with the credit union. So that's where I had been since 2012 up until January of this year. And
right. So then in January you quit, but you have your own independent NMLS license. So you're a registered licensed mortgage originator. And anyone who's been in the industry knows that those words are gold. Because of Dodd-Frank, people that are going to create notes, if you're doing it for a business for certain, you've got to have an LMO, an RMLO, that's right, to underwrite the files to stay compliant. You want to make sure they have the ability to pay. You want to document their debt-to-income ratio, all those things that make it, give it that stamp of approval. Yes, from all the things that we can see, this person has the ability to pay, and this is a reasonable, fair deal for everyone involved. And so even people that only have one, technically Dodd-Frank doesn't apply to just one mom and pop. You inherit a property, or you sell one property, or maybe a couple properties your whole life with owner financing. Even these days, there's been so much debate and uncertainty around the topic that some people, even if they don't qualify as a loan originator, like some mom and pop just selling their own property, they don't really qualify. But a lot of people say, I want a registered licensed mortgage originator to underwrite my file anyway. So you can put these. So you quit your regular job at the credit union. You're very well versed in all aspects of loans, modifications, everything. And what you'd like to do is, you can put these reverse mortgages and other deals, keep some money flowing in a way that you're very comfortable with. But you'd also like to figure out, how do I leverage myself in this owner financing space to help to get more consulting or contract work, right? So it's pretty common where people are always, this is the big thing, how do I find, I get this question all the time, how do I find a licensed mortgage originator in my state or in my area? And, especially the guys that are like, hey, I'm going to make a business out of this. I'm buying houses for $40,000. I'm selling them for, $80,000 with owner financing. And I'm doing this, 2-3 times a month. So these guys need to figure out, and I think the prices are anywhere from like $400 to $800, or possibly even more, just to pay someone to underwrite the file. Is that what you're, is that what you're seeing, Tanisha?
Yeah, that's what, because even from this side of it, from mortgage origination side, your average processing fee anyway is anywhere between $400, $500 to, $800 to $1,000, depending on the lender. But so because even the person that may see themselves doing one or two here, I think it's still in good practice to at least know the process. Whether you hire an RMLO or not, for that transaction is still good practice to do. I would, I plan.
No, and so just to be fair, it didn't used to matter that much. If you're buying a note on the secondary market, we never used to pay that much attention, right? We're buying owner carry paper, right? But now, because if you buy a note that was put together inappropriately, or is seen to be in violation of Dodd-Frank, or was predatory in some way, if you buy the note, you're no longer protected. Any deficiencies in how the deal was put together when it was originated are going to inure to you as a note holder. So in the old days, I never used to care that much because I'm not originating. And then by the time I buy a note, I'm a holder in due course, and that gives you some sort of protections. And I can't articulate all the laws on this specifically, but really that doesn't matter. So now when I'm buying a note from someone who I know is creating a lot of paper, I need to see that they're using a licensed mortgage originator to put that deal together. So I think now what you're wondering, Kanisha, is how can I get myself out there? I know you hooked up with a company when we were at PaperSource, and have you made any more progress? I'd like to spend just another couple minutes seeing if we can if anyone has any ideas for Kanisha, please unmute yourself and participate. Every business comes down to marketing.
Yeah, exactly. And what are the buzzwords? Like what would be something to get a person to, if you're seeing an ad, you see a social media post or not even that, where should I target? Are my customers on social media? Are my clients on social media, or are my clients more direct mail, or are my clients by and large, do you still read the newspaper?
Yeah.
Because I'm kind of in between both. I tell my sons that I'm very thankful for being born in 1971 because I can appreciate the time I was born in, what came before me, as well as where I am now. And, I have millennials in my house, so I can appreciate.
Oh, don't say the M word. Did you say the M word out loud? Did you say that out loud?
So it's like that, but that's their arena. So I'm wondering, okay, I'm into, and you say this all the time, work smarter, not harder. Being effective and efficient. I don't want to spend a whole lot of time climbing a ladder and has leaned against the wrong building, So
right, and I think we can. There's always more to do, but just my initial download, and then we'll open the line to see if anyone has any ideas for you. But as far as marketing, I think a lot of what you're going to do is going to be relationship building, like you did at PaperSource. So I think you're going to have to connect with other professionals that are in the business. Obviously it depends on where you're licensed, if you can help people in their state. But I think at the very least you need to have some sort of a video, like a YouTube channel or something where you're constantly talking about it. And then when just little snippets of educational things or anecdotes or things like that. And then when you're titling your post, you title them, that are keyword rich and they're, so with our licensed mortgage originator, Dodd-Frank, real estate investors carrying paper. I mean, those are the kinds of things. And then you give a platform where those that you're networking with, like myself, I can link to you, right? So you get backlinks from other people that are in the industry and saying, hey, here's someone who's doing this thing. But you've got to have some sort of platform so that people know what you're about and why they should care, because most people who are not in our industry have no idea about Dodd-Frank. They don't know what a loan originator is. They especially don't know what an MLO is, unless it's one of those companies where, it just builds like a pyramid.
Right.
or what, MLM. Yeah. So anyway, I would really suggest that you just start talking into a camera, or whatever, and creating that. So that's a good start. And then just, then people have a way to connect to your piece, because I think you're licensed in California.
Yes.
Yeah. So there's a lot of people that even when they only have one deal to do, they want someone who has an MLO, and even so just start talking about that, and then I will certainly keep you. I'll have you keep you in mind for myself, obviously, because you're a member of our community, but. We just need more people to know that you're there. So does anyone else want to give, Kanisha, any feedback?
Hi, Kenesha, this is Kioka. Do you attend the real estate investment clubs in California where you're located at?
I have
started
back. I used to, after being in the note space, I kind of was, a little over it. But now I most recently started going back to attend a few of them.
Because from there you will find a lot of people that's into flipping properties or even doing owner finance where you can have a lead.
They're starting to be more and more popular, particularly down here. There's always something just about every weekend and even through the week. I have gone on to Meetup to start, seeing what kind of meetups are around and happening. And so I have this whole schedule for June that I'm going to start going to do that network in-person relationship building. But like Dawn was saying, to tie it back to that YouTube, that was brought up before to me. So it's like, okay, let me go ahead and submit to the camera. And
yeah, and the thing is, not everyone's comfortable with that, and that's going to be why some people are going to. The fact that you won't look like you're super polished, or this is your from Hollywood or something, that's going to be why people will like you. So that's the nice thing, is the people that are going to resonate with you will already know, because they can get a feel for who you are just on the camera. So just be yourself. I mean, I don't know. I'm really such a dork.
Even if you don't have to get on the camera yourself, you can put together a presentation.
Yeah, that's true.
That you can leave at too.
Yeah, Yep,
that's true.
And just put a picture of you in the presentation.
Oh, yeah, I got a cute picture, so I can do that.
Yeah, okay. What I find out here looking for loans, what I find is that Texas is a place that always do loan origination. That's the one thing that I've seen in my duties of looking for loans. Texas is like the number one place where they always have loan originated mortgages.
Yeah, I think that there's a big company called Texas Pride or something like that does a lot.
Yeah, exactly.
In Texas. But also, there's a ton of notes created, Silicary in Texas, Florida, but also California has a fair amount. Of owner carry paper. You wouldn't think of it, but really it logs up there in one of the top 5, I would say, probably.
Yeah, I believe they have. I do know that they do produce a lot of notes, but I don't see a lot of them being originated by a loan officer.
Right. So So to me, you should be able to create a reasonable business out of that. But I'm really happy you came on, Kenesha, and thank you, Kioka, for that. And we're going to move on. I really appreciate, you being part of my world. You know that. And so thanks again. Okay.
I'll keep you posted and have progress by the next call next month.
Yeah, fantastic. Well, we have transaction review and calculator practice tomorrow night for anyone who's a citizen of the realm. So if we need to follow up with more, let's do that tomorrow night. So thanks again. All right. Is Fred Daschle on the line?
Yeah, I'm here.
Great. Hey, Fred, how are you? You're
Good.
A familiar name, and I recognize you from, how long have you been following the Note Queen?
Occasionally for about the past 6 months, but off and on the calls.
Yeah, I recognize, and we had a couple email chats, but okay, so you have a question about I'm reading your hot sheet interest form that you filled out. You have a question about selling your house in Los Angeles using an AITD or all-inclusive trust deed, this form of seller financing that we've talked about. You've been investing in real estate for 20 years. You never done much with notes. But what is it we can help you with today, Fred?
Well,
and thanks again for being on the call.
Right. Well, the idea of seller financing gives me an opportunity to spread a capital gain out over more than 1 year.
Mm-hmm.
And that allows you to reduce it, actually, because you might reduce it from the 20% category down into the 15% category. Mm-hmm. So how do I get maybe even an investor buyer to be open to that. Most of the real estate brokers don't want to deal with it.
So give us something to chew on. What kind of property? What's the price point?
And,
who doesn't want to chew on what?
Yeah, it's basically a house we've owned for 30 years, and
so it's your primary residence.
Yeah, and we're downsizing.
Okay, great. And so what's it? Let's just pick numbers. What's it worth? What's the market value?
Market value about $2.3 million.
Okay, so yeah, that's a lot of capital gains because you get your 500 homeowners exclusion.
Well, you know that if I bought it 30 years ago, there's a lot of capital gain in that.
You probably bought it for $30,000.
No. It was more than that. It was much more than that. But we're talking about, yeah. So what I need to know is if I try to do this, where do I find somebody who will structure that AITD for me?
Yeah, so you're trying to leave your existing financing in place. What's your existing financing? What's the loan balance?
Well, combined first and the HELOC is about $1 million.
Okay, great. So that's less than 50% loan to value. Is there good terms? Like, what is it?
Very good.
3, 4, 5. What is the term?
The average interest rate is like 2%. You wouldn't believe it.
Okay. Is it?
I mean, you can't just believe it. That's what it turns out to be.
That's fantastic.
It's a variable.
It's a variable, and then is there any balloon, or is this like fully ammed out?
No, there's
no balloon.
I don't want the AITD to last very long. Basically, I'm hoping this will be kind of a way so we can get the buyer in. He can then work on it, whatever he wants to do, maybe flip it or even take some time to arrange his own permanent financing. So I'd like the AITD to be like a 2 years or something like that.
Okay, so actually what you're trying to do is just spread you're gonna take the gain, but you want to take it just over maybe a 2 or 3 year period instead of all in 1 year.
Yeah, it will qualify for what the Internal Revenue Service calls an installment sale.
Right. Yeah, so that you get to spread out your gain. Yeah, it's a perfectly wonderful scenario, and so to me, this makes all the sense in the world. So what's the problem? What's the kickback? Have you tried to list it? Have you talked to brokers and they say no? I mean, what's the deal?
Well, actually, I've talked to brokers a little bit, and they don't know much about it. They don't do it. Your lender will foreclose. Technically, there is a due on sale clause, but the lender, I mean, if you keep paying it and so forth, I really, and if the lender knows that the thing might be, completed in a year or two, they probably won't do much about it.
Well, this brings up some good points. Any real estate brokers that are on the line, if you will educate yourself about these topics, you will do so much more of a service to your clients. It's really frustrating and it's such an unnecessary pain that so many real estate professionals just know nothing about this, so much so that they would as soon pass on a listing, or they won't even submit a seller financing offer to their buyers, to their seller, just because they don't understand it. So if you're in the real estate profession, you really need to educate yourself on these things, because this should be easy. This should not be a tough situation. And I just barely finished a big course through the California Department of Real Estate on this again, and refreshed myself on all these due-on issues. And the thing is, it is not illegal, immoral, or fattening to wrap a note, to leave it there. The notes, they have the due-on clause, which simply means, for anyone that's not familiar, is if there is a transfer or an equitable transfer of any type, the bank has the right, if they want to call the loan. That's all it says. It's an option to say, hey, they transferred title. If we want to, we can call the loan. In practice, that happens very, very rarely. They're very, usually if they're getting the payments, everything's handy-dandy. They have enough non-performing issues usually that they don't want to call a performing loan unless interest rates, but you have a variable, so your interest rate will go up anyway. But let's say, they're sitting on 3% paper, and if they call in 3% paper, they can loan it out at 6%. Now, they might start looking for paper to call if interest rates go up substantially. But even then, it's very, very unlikely, especially when you're only talking about, Fred, you might carry there might be a 2 or 3 year balloon, right?
Oh, yeah.
Right. So this is a super logical thing, and if I were a buyer, I would be happy. I would be thrilled to take advantage and leverage 2%, $1 million at around 2% average. That would be a really good thing to do. Unless you have, I don't know, in your neighborhood, are foreign nationals like Chinese people or something, the big buyers in your neighborhood? They don't tend to like existing loans. It makes them nervous.
Okay, that might be a possibility, but most of them are going down to Irvine. I'm in West LA.
Okay, so all I'm saying is if an agent doesn't know, I would get with a Keller Williams. They tend to be a lot more flexible and educated in some of these alternative strategies in general. So I would go with Keller Williams, and if anyone else on this call has an exact, I might know somebody. Who am I'm missing? I know
Dawn,
somebody for you.
This is Kanisha
Fred.
Again, if Fred can put his information, his contact information either on the website, on the Facebook page, because the broker that I work with is residential, commercial, real estate, and mortgage. And he is definitely a think outside of the box kind of guy.
So he's a real estate broker? He can list the house?
Yep.
Okay, Fred, we'll hook you up because there's 1 or 2 people we can hook you up with, but this is not a big deal. So someone comes in, what's a kind of a down payment you're going to want? Or let me just find out, what is your basic question? Because I could pontificate all day on this, but
well, I think
you're
addressing the question, but I'll probably want something like $1 million. In other words, less than, maybe $1 million down.
So $1 million down and a $1.3 million AITD. So you're the
that's
1
right.
million, right?
Yeah.
So the buyer that buys from you will owe you 1.3. So that's and you're going to wrap the existing couple of loans that are there, right? So you'll be in third position. If you've got a loan and a HELOC, then technically the loan that they owe you is in third position, but it's all encompassing. So what will happen is the borrower, you'll get a servicing company. The borrower will pay the servicing company what they owe you on the 1.3. The servicer then pays the first, the second, and anything left over goes to you. And right? So that's how everyone's protected, because they want to know that you're not going to take the payment on the 1.3 and just whoops-a-daisy forgot to pay. Not that you would. There's no incentive.
They need assurance that their payment is going to be that when they make their payment that the underlyings are going to be paid.
Mm-hmm.
So
right.
Okay, I understand the theory. Where do I find that servicing company, and how do I get that documentation that sets that up?
You know what? I can help you with that. This is what I do for a living. That's part of what I do is just consulting services that help people put the paperwork together along with all the services they need, finding what's a good fit. Because, for instance, I was surprised to find out that FCI, that's one of the largest servicing companies across the country, will not board a loan that has an AITD underlying financing. They just won't do it. I was shocked when I found that out. So I got to hook you up with the right people.
I'm sorry.
So if you try to, Fred?
I didn't follow what you were saying they wouldn't do.
They won't board a loan for servicing if there's underlying paper on there.
Oh, I see. When you say board a loan, they won't accept the business of servicing a loan for underlying.
Right. So
okay.
Part of what I do is help you structure your deal, help you put the paperwork together, help you coordinate, and especially if we get the kind of broker that Kanisha and I and probably others on this call could hook you up with, that we can all work together and just, make sure, we move through title. If your CPA has questions or attorneys have questions or whatever, we coordinate all of that. So feel free to follow up with me and just hire me to help you walk that, put those pieces together. All things considered, it really gives you a lot of peace of mind. And, frustratingly, even attorneys, unless they do this, they just don't get it. And when people don't get things, they say no. Brokers say no. Attorneys say no. Accountants say no when they don't understand it. But as long as you do it, the right way, it's perfectly legal and insanely attractive, strategy. And I wish more people could do it. But it's not rocket science. It's just very few people walk down this road.
I think Kanisha or somebody on there was suggesting a particular website I might look at.
Yeah, we're going to hook you up, Fred. Can you just email me? Are you in front of your computer?
I am.
Okay, just if you will email me, then you and I and Kanisha will get on an email chain together, and we'll give you one or more options for people that can help you list your place, and people that will be open to these ideas and that can easily coordinate, with my services as well.
Okay, what I should do then is what I'll do is look on your website and find your email contact that way. I've been on email with you before. I don't know exactly which. Yeah,
Dawn.
Email.
It's DAWN, Dawn, DAWN at notequeen.com.
Okay, thanks.
And then and then the consulting, if you wanted to go there, I forget which page. Axel, where's my consulting thing? Is it on the? I forget. It's probably.
It's one of the main menu top.
Oh, right. It's on the main menu, the consulting stuff. Yeah, so it's pretty easy to find too. You can pay by the hour or by retainer, and just the A to Z help. And I'll just make sure you get those pieces put together. But thank you very much for being on the call. What you're trying to do makes all the sense in the world to me. It's not rocket science, but it's so tough to find professionals that feel comfortable and are proficient at figuring these pieces out. And I'm speaking of experience right now, literally 2 weeks ago, right before I went on vacation, there's a property here in Carson City, Washoe Valley, the south end of Washoe Valley, and I got a lead on it. And these people, they need cash out of it, but so it's insane. So let's say the property's worth about $800,000, could be worth a little less, a little more, something like that. Well, they've got a $600,000 loan on there. And they need $40,000, and they're out of state. If they can get if they can shake $40,000 loose out of this property, they can buy a property where they are in Arizona, and go from being renters to owners. And they so desperately just want to create that stability for themselves. And I said, well, why don't you just sell the property? And they said, well, we can't afford for the tenant to move out because we're long distance, and if we even get 1 or 2 months where the tenant's not paying rent, we can't make the mortgage payment. And I said, well, what's the mortgage payment? And on a $600,000 loan, the PITI on that thing's only $1,800. And I go, how did that happen? It should be like a $4,000 or $5,000 a month payment. And long story short, they had an amazing loan modification that they got back in the day, with the HAMP programs or whatever. and it's the most stunning loan modification I've ever seen, so that an $800,000 property with a $600,000 loan, I can take care of it, PITI, principal, interest, taxes, and insurance, for $1,800, and it conservatively rents between $2,500 to $3,000. So I can have positive cash flow just giving them their $40,000 so they can start their new life, but I'm taking it subject to the existing loan. And that's, the price isn't astounding. So maybe I have $100,000 equity. Who knows? You never know until you try to sell a property what you really have. But the point is not the price; it's the terms, and that loan runs for the next 20 years. So if she had a regular loan on that property, or I needed to come up with $650,000 cash, the deal would not work. But because I can give her some of her equity and take it subject to her existing loan, which is phenomenal, I can actually give her what she needs, and I get what I need. And this thing will carry itself until I decide that that's my perfect dream house. It's a great property. It's like a 5-acre little ranch, and so maybe when I'm, older than I am now, I'll think that it's nice to retire to that property. So in the meantime, though, it's going to carry itself. So, but I'm having to train, the escrow people, the title people, the seller, the insurance company. I'm just, sort of coordinating and, being the puppet master of having all these people so that I can, make it work for everybody. And so when we can solve problems like this, it's so powerful because there's no other buyer. There's no other We Buy Ugly Houses people that would buy it for the price point I'm coming in at. They're not going to pay $650 for a property that might be worth $800. That's too high. But because I know how to take it subject to this incredible financing that saves me $2,000 a month from what it would normally cost to carry this property, I can afford to give her money, and she gets money without having to go into default on her loan, kick out the tenant, fix it up, market it, do all that agent bit. But, a real estate agent would be a problem. So because they usually don't understand. So, but anyway, enough said on that. I'm just, so in love with when we learn how to use these strategies ethically, intelligently, appropriately, then we can solve problems for, just one mom and pop to another, which I love to say. Financial solutions, just one mom and pop to another. So Fred, please email me, and we'll get you hooked up with one or two people that, would be easy to work with what you're trying to do.
Yeah, thanks. The email's in your inbox right now. Okay,
fantastic. Thank you so much. Now, I just want to take a quick breath, and wow, it's fantastic. So, Axel, I know you just texted me with Robert, who is one of our hot seats. He's having trouble, but can we just open up the lines? Who's here? I just want to hear voices. Who's here? Anyone want to say hi?
I'd like to say hi. Can you hear me?
Yeah. Who's this?
Great. My name's Denise. I'm very intrigued by what you're doing. Yes. I'm a real estate. I'm not a practicing real estate agent right now, but I have over 20 years of experience in real estate, and this whole idea is very intriguing to me, and I definitely want to know more. So this is the first time I'm on a call with you, and I kind of joined in when you were in the middle of the call, so I've gotten a few questions and stuff together here.
Well, fantastic. Thanks, Denise. I appreciate you being on, and I hope that we can address your questions, down the road. I don't know that we'll have time today. Right. But I would love to, I just love this topic because it's so powerful for us helping each other. Instead of relying on Washington and Wall Street, for all our financial needs, we need to quit feeding that beast and work with each other. But we have to balance risk and reward. It's very important that we do that, because when anything is inherently unbalanced, you pay for it. Society pays for it one way or the other. If I take advantage of someone because I know how, or I know that they're in a tight spot, and I take more than my fair share out of a deal, okay, maybe I short-term won with that, but I'm going to lose in the end because now that person is not as financially set as they should be, and that potentially creates drains on the social systems and other things. So I'm really a firm believer that risk and reward has to be shared very, very equitably. So anyway, thanks for being on the call. Who else is here? Is my little friend from the AT&T store here, Matthew?
Not sure, but my name is Sabrina. I'm from Georgia, and
Sabrina.
I'm on the call. Yes.
Fantastic. You're one of my hot seat people that we're trying to get to today, right?
Yes.
Yeah, fantastic. I'm really glad you're here. And anybody else want to say hi before we just get on with our hot seat people?
Hi, Dawn. It's Peggy.
Peggy, oh, I'm so glad. I always love hearing your voice. Or usually I don't hear your voice. You just email me later. Oh, that was a great call. Always great to have you on.
Great as usual. Thank you.
Yeah.
Hello, this is Joe.
Hey, Joe. Where are you from?
Hey, how are you? The Note Queen, the famous Note Queen.
Yeah, here I am. Ta-da.
Yeah, thanks for having the call. I've been listening to your YouTube videos, so it's been really interesting learning about the note business. I'm thinking about creating some paper. So. Okay,
as a real estate investment strategy that you repeat over and over.
Yes, yeah.
Gotcha.
I recently made a hard money loan, so I like the concept. I'm primarily a landlord, and that I've moved out of state, so I'm not fond of managing the property 3,000 miles away. So I'd much rather hold the note than.
Yep, you'd much rather be the bank than the lender than the landlord, especially on long distance rentals. That is for sure.
And what was that hard money lender that you went through? This is Sabrina.
Excuse me?
The hard money lender that you went through, may I ask? Who did you
I created. I was the hard money guy.
Oh, gotcha. Okay.
So I held the note on a fix and flip, and it went smoothly. I made 12% on it, and the concept is, I like the concept.
So basically, you've gotten your toes wet, and you like the idea of you've originated a note. So it's not that hard to figure out how to, carry notes when you sell a property. And then from there, it's not hard to get to, I'll buy other people's notes at a discount, right? So it starts being one conversation, right? Multiple sides of a crystal instead of a completely different concept, right? Lending to owner carry to buying discounted notes. It's just, it's that beautiful slippery slope, right? Being a hard money lender is a gateway investment to discounted notes. Gateway drug. Okay, I thought it was funny, but yeah, it's only me. All right, so thanks for being on, Joe, and thank you for everyone who, if I heard your voice or not, we just have a few minutes, and I do want to honor the fact that we've had people fill out these forms. Axel, what's the deal with Robert? Is he on the phone yet?
Don, he wasn't able to resolve his technical issues.
Phone issues? Okay, so let's go to Sabrina. Let's hit Sabrina. Okay, tell us about you. I'm looking, you want to know, you're from Georgia, you want to know more about seller financing. You're a fairly new real estate investor. So just talk to us about what's your most pressing need. Obviously, we've got 10 minutes or so left.
So something similar to what Joe has done. I have this property that I'm interested in. It's a foreclosure, and actually it's going to be auctioned off for $25,000. A friend of mine, if I could, inquire that property, a friend of mine is interested in it, but her credit is not that good. But she wants to work on her credit. But I just wanted to know, learn more about it. Is this something that I can do for owner finance with her, or basically like Joe? with a mortgage that I can create for her and make some money off of it when she's ready to purchase the home.
There you go. So you're like, hey, I have some money to invest, and I got a friend who needs a house. She can't get a bank loan, and you're just sitting there going, and here's a house that's coming up for auction. What if I go get it? How do I turn that into an investment with my friend? And number one, I have a good investment for me, and number two, she helped my friend get a house that, and create stability and build wealth for herself that she otherwise wouldn't be able to do. Do I have it right?
Right, exactly.
Okay, and is $25,000 a lot of money to you or a drop in the bucket? I mean,
it's a lot of money to me, but I mean, for the house in the area it is, it's a good buy. So.
Okay, so this isn't like a lot of times people have money that they need to churn, right? And it really needs to work hard. You need to be an active investor with it, and you need to churn it and burn it and make above average returns, and you're willing to be actively involved to do that. Other people have money, like let's say in a self-directed IRA, it's like, hey, I've got a few $100,000 sitting in there, whatever, $50,000 to $5 million just sitting in there, and they just need passive income for, and they don't want to be active at all. And, but how would you describe yourself? Like, if you took...
No, I'm not that. I would actually need the money. I've been trying to wholesale as well to build up my nest.
Okay.
But hasn't been successful in that.
Okay, so this is not a situation where, hey, I'm sitting around with, a lot of money doing 1% or less in the bank. I'd like to do something better with it. It's like, hey, you're scrambling, like a lot of us, right? At various times, if not now, we've all scrambled, at different points. So could you come up with the money yourself, or would you need to borrow it from someone else?
I need to borrow it from someone else who basically have it and willing to invest it with me.
Gotcha. So depending on whether it's your money or especially if you leverage hard money, that's a more dicey situation. But if you can get, because hard money can be impatient and it can be expensive, right? It's usually high interest rate, short-term kind of stuff. And so if you can get patient money instead of really aggressive, impatient money, that would be the best. But let's just pretend for the purposes of moving through this conversation that you have the money and you want to buy it. So what is this property worth right now? Is it really, what's it worth? Like, you're going to pick it up for $25, so is it worth $25? I mean, what is it worth?
It's probably, once it's fixed and everything, and I think it has like minor little work that repairs needs to it. Once it's fixed up, it's valued at probably about $85,000 to $90,000. Okay,
so 25 acquisition. How much rehab?
After rehab, rehab will probably be about a good $15,000.
So $15,000. So we're in it for $40,000, and you think that you could get an appraisal for $85,000.
Exactly.
When all is said and done.
Yes.
Okay, and how much money does your friend have for a down payment?
She probably have about $3,000 to $5,000. That's it.
Okay, that's pretty darn light. Pretty darn light.
So how much would you ask?
Okay, so 10% is across time. 10% is considered to be a reasonably good down payment, and I've seen people take less. And I've bought notes where people put down $5,000, $5,000, and that represented anywhere from 6 to 8%. And those people have a lot higher statistical likelihood of problems. So it's just the statistical likelihood of default is higher the lower the down payment. I mean, I have a portfolio of 10 notes that I bought with similar numbers to this, and the people who only put $5,000 down, I would say 33% of those notes have had trouble. I'm not saying we went to foreclosure, but they've had trouble. Okay?
Gotcha.
So if I would be looking, I'm not saying don't create a problem for or a solution for your friend, but it's tough because, when someone's used to renting, Or
yes. Well, she did purchase a home, and she foreclosed about, I want to say about 4 years ago, 4 or 5. Her husband got laid off, and she's a hairdresser. So,
yeah.
Yeah.
Mhm. So let's just talk generalities because, not get too far in your specifics, but what you're going to want is the highest down payment that the buyer can afford. And then you're going to want to figure out, let's talk rents. This $85,000 property, what would it rent for?
The area rents for about like $800 a month to $950.
So let's just say $850 because that's 1% of $85,000. So basically, and that's not a bad rental. At least in my area, I think in Georgia that's a little light. Sometimes you get 2 or 3%, right?
Mm-hmm.
So this is a better, flip. But I'm not sure unless you can get a good down payment. I think you're gonna. Not that foreclosure is fast in Georgia. So if she defaulted, you could get it back. But that turns a great relationship into a really stressful one, right?
Right. Gotcha.
So anyway, basically, here's how I would look at this. If I was looking at buying the note that was created from this, I would like to see 10%. More is always better. I would love to see 20. I would love to see 30% down. And depending on that number, the higher the down payment, and then it's easier for you to sell your note at a price that you're going to like, and your overall take is better. But anyway, so if you took, let's say she has $10,000 down, and you have a note for $75,000. Well, then I would next ask myself, what can she afford for housing? And hopefully she still has reserves, because what happens is a lot of renters, they can't get out of a renter mentality, so they're not used to keeping reserves for repairs and maintenance and things like that. And the water heater goes out and they can't make their mortgage payment. So someone has to have some financial reserves, and they have to be used. It just can be work to train people in to think like owners sometimes. You would be surprised. Sometimes you would think, oh, no. But anyway, so I would go, okay, what can she afford for housing? Okay, she can afford, so let's say she can afford $850, and that's what market rent is anyway, but instead of renting, she's owning this thing, PITI, for $850. Is that a win-win? That's a really big win, right? I mean, so not only did you just put $10,000 of hard-earned cash out of your pocket, that gets you committed, but also, even if times get tough, there's nowhere to go because you can't rent for cheaper, right?
Yeah, exactly.
So I would look to find a way that they've got to at least be able to afford rent, and then find a way, if you can, to make owning the house cheaper than rent. And so and if you can leave some equity on the table for the person as well, like say, oh, it's worth $85, but you gave it to her for $80, even though you can charge more. I'm just saying that sometimes just because you can do it is not always the best way to do it, because you're building perceived equity. If someone feels like, oh, I'm going to pay for the next 30 years and I'm still upside down, that's less of a commitment than someone who goes, man, I got instant equity when I bought. I put down hard cash. I can own for cheaper than rent, or the same price as rent, or close to it. And I've got this equity that I'm building. So anyway, so I would find out how to. So basically, we're going to wrap up with, when you're going to carry paper and you hope to have a note worth holding or selling. Even if you don't plan to sell the note, even if you might just want it for your portfolio, but you want your kids to inherit something that's worth holding, that's not going to be a big headache. And then if you have to sell it for cash, you want to know that you can get a reasonable price, right? The highest possible price. So biggest down payment that they can put down, a nice solid interest rate in this price point, you should be able to charge 9.9 even, and still make the metrics work well for them. So the highest interest rate that makes sense and that's not usurious, and the highest monthly payment that they can pay, so which means the shortest amortization, right? So if you're just a mom and pop doing a one-off deal, you could put in a balloon. So put in a 5-year balloon, a 3 or 5 or 7 year balloon. But if you're in the business of creating paper, you can't do that. You have to have fully amortized. So if you have to create a fully amortized product, make it 15 years if they can afford it. Don't just assume to go 30. Go 20 or 15 or even 12. Whatever they can afford, make that the amortization. And then if you ever have to sell that note, you're going to get the highest possible price for it. It also helps if they have reasonably good credit, like not below 600. That's really tough. So that's just that's all we have time for today, and that's just kind of a quick wrap up. But does that help? Give you some perspective?
That helps. Thank you so much. Yes, it helps.
Yeah, you're very welcome. Thank you for taking the time to fill out the form and being on the call, and all of you so much. I appreciate you being here. Just want to remind you, if you want to go deeper into this kind of conversation, consider becoming a citizen of the realm. I tongue-in-cheek call this the Queendom, and it's where we talk about the seller financing and notes and private lending and all things that we can do to create financial solutions, just one mom and pop to another. I appreciate you so much. If you can unmute and say goodbye, I won't feel lonely.
Goodbye.
Thank you so much.
Goodbye.
Thank you so much.
Bye, everybody.
Right.
Thank you, Don.
All right. Thank you. Until next
See you, Don. Thank you.
Thank you.
Thank you, Don.
Thank you. Take care.
You've been listening to Virtual Coffee with Dawn Rickabaugh. For more, please visit notequeen.com.